Hello and welcome. Now, one set of stocks which really benefited from Q4 in terms of the earnings that we saw was interior decorative kind of segment, and plywood companies. You've got your wall panels and the like, and therefore what we're going to analyze today is Euro Pratik shares, and we've seen a very sharp rise in the stock price that you can see. In fact, from the bottom, the stock is actually up over 50%. And the last, when we analyzed this stock, it was sub 2,500 crore in terms of market cap. Currently, the market cap sits at around 3,200 crore. So in the last 6 months or so, you've seen a very solid rally. In fact, if we can pull up the one-year chart before I explain what the company does, you'll get a sense of what's played out. And it listed in 2025. After that, excuse me, it made a couple of acquisitions. So from the lows of 210, we've seen the current stock price at 313. So it's been a phenomenal rally in the stock price. That's really the story in terms of how the stock has moved. But let's switch focus and try and look at the business bottom up again and try and analyze what's really changing on ground and quiz management on that. First off, this was incorporated in 2010 in Maharashtra. It basically sells decorative wall panels and laminates, and it does so pan-India. What are decorative wall panels? Well, they are basically, rather than painting your wall, you have a laminate on your wall, which is basically, which gives the aesthetic look to the home, which is what Euro Pratik typically does. It designs it, and thereafter it has tie-ups with distributors and sells it. We'll get to the exact business model, but basically it's an asset-light seller and marketer, not a manufacturer. It's promoted by the Singhvi family and controlled by the Singhvi family. Market cap currently at 3,200 crore. In terms of products, decorative wall panels, I spoke about that. Ready to install designer sheets for walls. There's decorative laminates, thin decorative sheets for furniture in terms of your cupboards, etc. You've got interior films, self-adhesive films to refresh surfaces. You've got profiles and moldings, trims to finish panel and laminate edges. You've got highlighters and translucent panels, which are feature pieces for lighting and accents. You've got exterior claddings, which is weather-resistant panels for building exteriors as well. You've got adhesives, glues for panels, laminates, plywoods, and the like. And then you've got some DIY products, which is water-resistant, termite-proof, recyclable decor solutions, which Euro Pratik Sales also provides. But those are more ancillary in nature. In fact, let me request my producer to put up the product mix first. Can we pull out the product mix first, if we can? So the product mix for FY26 suggested wall panels at 57% of the revenue. There you go, FY26 product mix. You've got wall panels at 57%, laminates at 31%, and others is approximately 12%. Goes on to show that a large chunk of the revenue, 88%, comes from only those two parts of the business. Now let's go back, try and analyze what the geographies are in terms of the product. 98% in India is India, 2% is Nepal. You've got the India split in terms of geography. South India is 47%. And they've entered B2C in South India as well through an acquisition which they made last year. West is around 26 odd percent. You've got 16% North, 8% East, and 3% Central. Essentially, North, East, and Central is maybe a quarter. So there's a large opportunity size sitting there. But South and West is where there is dominance. In terms of distribution footprint, India, from an India standpoint, they've got 196 distributors. The plan is to grow this by 12 to 15% every year. You've got a disproportionate number of distributors contributing to revenue. That's the other thing. So you might well grow distributors at 12 to 15, but what is the contribution to revenue is something that we'll try and see, because the dent has to be made by pretty much the 12 to 15 which is getting added, and whether they can make that dent or not is really the question in terms of revenue growth. Nepal they've got 2 distributors sitting out of Nepal. So in all, 198 currently in terms of the distributorship footprint. Now, how do they do their business? Asset light, there's very low on fixed assets, and we look at the balance sheet and you'll see it. It's largely design-led. There's outsourcing of all manufacturing. So there are 36 plus contract manufacturers across India that they have and overseas. They create designs, manufacture, and make to specification provided by the company. No manufacturer carries inventory. They're basically producing against the orders of Euro Pratik. So essentially, those orders get delivered straight to them. It sits with Euro Pratik in terms of the inventory. They sell to distributors who thereafter sell to retailers and contractors as well. And there is, of course, increasing forward integration. I spoke about how they're going into retail as well in a bigger fashion. In fact, around 120 odd crore will come from retail in terms of the top line this year, FY27. And the top line is around 350 crore. So substantial. And of which 20 crore will be profit. Out of the 80 crore profit that they've done this year, another 20 crore will get added just from the retailization of the business. Whether there's a bit of acceleration, exuberance coming in, and whether those numbers are sustaining or not is really the question overall. Let's now talk about the financials. And in terms of the metrics, you've seen a decent top line growth, around 8% CAGR over the last 3 years. Nothing strong per se, but maybe this retailization will add substantially to the top line. The guidance is that they'll do 25% growth. Now, what I'd want to know is whether they do 25% on the 335 plus the retail, which is Euro Veneers, which is what they've acquired, or do they do 25% including Euro Veneers, in which case they're largely building in for the Euro Veneers acquisition straight into the top line, and there's going to be very low to no growth here. So we'll try and get that perspective. EBITDA has gone up well. It's gone up 14%. So there's been some operational efficiency which has played out. And you can see that on your screen. Of the 77 crore, which is not a low base for FY23, because FY22 was also 58 crores. So you've seen a substantial jump in terms of EBITDA. Despite that, you've seen a decent margin expansion. Profit is actually down 7 odd percent. Ballpark, what you've seen is that's below the EBITDA line items, which has impacted profitability. So that's probably the way to think of it. Let's talk about margin trajectory now, and you'll see that this one clocks typically 35% plus margins in good years at least. You've got a couple of years where operating efficiency wasn't there and certain businesses weren't added to Euro Pratik, but after those businesses have been added, you've seen that Euro Pratik typically does 35% odd in terms of margins. Can they sustain this trajectory is the question. Also, they do 20% in terms of PAT margin. So 77 crore PAT on a 335 crore top line is extremely strong, right? It's 20% plus on PAT margin as well. In terms of balance sheet, how strong is it? 310 crore is the size of the book. So it trades at 10 times book. Just something you want to keep in mind, and that kind of signifies as to how small the asset base is of the company. The other piece is that the borrowings is around 11 crore, so no concerns from a balance sheet standpoint on borrowing, and cash bank is around 20 crore, which they typically use for growth, acquisitions and otherwise. Cash flow. Now, this is the other piece. Receivables and payables, they've moved in different directions, which has adversely impacted cash flow, right? That's the other concern here. Can the cash flow start to unwind really will be the question, and we'll try and quiz management as to whether this is that year in which that happens. In terms of ROC, very strong, right? You've got literally 50% plus ROC in 4 out of the last 5 years. Even in FY26, it's 38%, which is extremely strong. Now, the question, of course, is that this acquisition which they've made, does it dilute ROCs materially? If so, how much? Is it temporary? Does it start going back up? That's really the question. They've invested around 75 odd crore in the Euro Veneer acquisition, which is last quarter. We've spoken about it 2 quarters ago. But nonetheless, we'll try and understand how it's playing out, because now we'll have a better visibility on what's playing out actually. What's the other interesting piece is that you've started to see acquisition by the promoters, right? So when you look at the shareholding pattern, the last quarter, we've seen the promoters add nearly 1% to their shareholding. That's where it starts to get interesting. FIs have actually trimmed, DIs have stayed as is, and there's no change in public holding as well in a material fashion. In fact, the other thing that really stands out is while they had 73,000 shareholders in September 2025 when they actually got listed, now they have a third of that. So the interest has waned and waned quite sharply in the company. This is, of course, as of March 2026. And that's the other piece. Currently, the number of shareholders stands at 28,000. Generally, when we see these things, you will start to say that retail has started to exit, which means that probably the business isn't fully understood, and the fact that some of the money has gone away, and which is why you're seeing valuations depress as a result. So something just to keep in mind, promoters buying, retail exiting. That's broadly the way to think of this. Valuations. Now it's an interesting one. If I can pull up the P&L one more time, right? And it'll depend on how this shapes up. Currently, it trades at around 35 times earnings, right? Currently. The top line is around 335. If they grow at 25 odd percent, that's 450 crore. If they can continue to do a 20% PAT margin, that's around 90 crore of PAT, which they clock. At 3,100 crore kind of market cap, that's approximately 30 to 35 times 1 year forward earnings is what you're paying for. But what's more important is we'll take a view from Mr. Pratik Gunvantraj Singhvi, who's the Chairman Managing Director of Euro Pratik Sales, who's joining us this afternoon to get a better perspective of what's playing out on the business. Pratik, great having you. Let me first start off on the traction that you're seeing in the business. Interior decorative, the segment or companies in your segment and space, they've done relatively very well. Demand remains strong. Last couple of quarters, we've seen that tide turn. What are you seeing on ground? How's demand shaping up, and how's raw material prices shaping up?
Firstly, thank you so much for having me here.
Thank you.
Q1 is on the expected lines. The demand has been strong in spite of the geopolitical and other issues which are happening globally. As a company, we have done quite well, and we are confident of growing from what we have done in the last few years.
Is the demand stronger than last year, Pratik? If I were to just peg last year versus current, and I'm not talking about Q1, but let's say Q4 FY25 versus Q4 FY26, and is that demand sustaining as we go into FY27?
Yes. Everything is playing out well. The demand is, as I suggested, it is much better than what it was last year.
Pratik, give us a sense of that versus last year.
So, the business is doing well. We want to grow at least 30-35% in the current year.
30-35%, that includes the inorganic plus organic, I would presume.
Our acquisitions are, you can call it as a semi-organic, because it's forward integration. Almost 30 to 35% gets eliminated because it's intercompany sales, because we are selling it to them and they are selling it to their retail and wholesale customers. So you can call it as a semi-organic. In spite of all that, we would be growing at around 35-40%.
35%. That takes your top line to around 450 to 460 crore in FY27.
We are confident of doing more than that.
You're confident of doing more than 460 crore in FY27. Okay. And with regard to the tailwind, next couple of years, on the higher base of 460, 470 crore kinds, do you continue to expect a 20-25% growth clip, or will it be even higher than that?
Management internal target is to reach FY29 1,000 crores revenue.
1,000 crore revenue by FY29. Wow, that's extremely strong. Okay, understood. And how should one look at margins for you? Because you ventured into slightly differentiated and newer businesses, does it dilute your margins?
So the acquisitions which we have done is like we have taken a controlling stake 51%. So revenue comes in 100% and the profitability comes in at 51% only on the balance sheet. Having said that, we are more looking at the return on capital employed. We want to be at 35-40% on return on capital employed. That's the target.
35 to 40% on ROCE. But it will be margin dilutive. That's what you're essentially saying.
It's not margin diluting, but then when the profit comes in just 51% and the revenue comes in 100%, the picture is a little distorted.
I get your point. Okay, so because you're consolidating your books,
Exactly.
100% will have to be reflected on the top line, but only 51% will come to the bottom line. I understand your point.
Yeah.
And therefore, on that part of the business, but okay, let me take a step back. So therefore, say on the console business, you're doing 460, 470 crore of top line. What's your blended PAT margin going to look like? Give us a sense of that. Educate us on that.
So our target is between 20 to 24, 23, 24%.
20 to 24%, and that means that you'll likely do 240 crore of bottom line profit by FY29, because on the 1,000 crore PAT, you'll do 24% odd in terms of PAT margin. Understood.
Yes.
And how should, Pratik, how should one look at your acquisition, Euro Veneers, right? How many stores do you have today? How quickly are you looking to expand that?
So Euro Winner World is a single retail store. When we joined them, the revenue, they have been consolidated from the 1st December. A year prior to that, the revenue was around 48, 49 crores. This year, we are going to clock around 110 crores. So that is the phenomenal growth by adding the new lines, new products in their retail showroom. Also, they have a good customer base of more than 3,000 architects, designers who are buying from them every single year. So it's a retail store. We plan to have a franchisee of that as well to grow in the southern part. It's one of the biggest retail stores in the southern part of the country.
And how are your distributors taking that?
The distributors, they are there pan-India. We are not a regional company. So it does not make much of a difference to other parts of the... And even today, the Euro Winner World buys the product from the main company, the Euro Pratik, at the distributor price only. We don't give any concessions to them.
I understand. So nothing changes for the distributor at a distributor level. But does it make them worried that you're getting into retail and you're bypassing the entire distributor chain?
No, nothing of that sort. It has to be a size and scale to get into. We don't want to get into smaller companies with smaller revenues. Both the companies which we acquired, one in the north and other in the south, we are targeting at least 80 to 100, 110 crores revenue from them.
Okay, you've guided for 470 crore of top line. While it looks very impressive, I was just thinking, internalizing those numbers. You've guided 115 crore coming straight from Euro Veneer, right? This year in FY27. So on the 335 crore base, you were in any case clocking 450 crore at zero growth because you acquired some part of that business, right? Is that the right way to think of it?
No. Firstly, they were there for the last 4 months of last year as well. They have been consolidated from 1st of December. Secondly, as I said, it's a semi-organic. Around 30% of the sales gets eliminated due to intercompany sales. So that 110 would be at least 60-70 crores only on the top line.
Understood. So the balance of around 60 to 70 crore is pure growth for you. Is what I'm trying to understand for FY27. Right. Understood. And
so
that's roughly...
Our target is 15 to 20% through organic and 15 to 20% through inorganic. That is the internal guidance.
Got it. Okay. And how quickly can that grow at? Say you do 115 crore, just, I mean, not for the books, but for the technicality of it in terms of the revenue. You do around 115 odd crore this year from Euro Veneer. How quickly can it grow next year? I'm just trying to get as to whether it can be a significant growth engine for you or not.
Yeah, we plan to grow at least 12 to 15% every year.
Okay, on that. And at a standalone basis, are the margins there better than what you do typically, or are the margins there worse on a standalone basis, on the 115 crore?
It's on a similar similar pattern maybe.
Okay.
A little less than the company. But then it's for us, it's a forward integration where we understand the architect's designer, their taste, their preference, and which helps the parent company in a way.
Got it. And the 15 to 20% on organic that you're talking about, right? Inorganic, got it. But on the organic side, the 15 to 20, what's the lever there? Is it just demand? Is it increasing distributors? And because you've got some of your distributors contributing a larger chunk of the revenue, how confident are you of some of these levers?
So yeah, it's a mix of everything. We have been, innovation is the key for our business. We have been innovating a lot of new products. In the coming 3 to 4 months, we are launching more than 250 to 300 designs as per the Indian market. So the new launches are in pipeline. Also, the distribution network is growing. In the last 6 months, we have added more than 110 dealers in the B and the C category of cities all across India. So yeah, combination of all. But then yeah, the new product categories, the new innovation which we are bringing in, which it will help us in the growth journey from here.
Ah, interesting. Okay, and uh, what about the levers? You'll add distributors as well, right? So one is of course product, the other piece is distributors. If you can cover that as well.
Yeah, we want to penetrate deeper into the Indian market. As you can see, there is a lot of scope to grow in the North and the East India business. So there we are finding good retail outlets to promote our products. So we are hopeful that at least 12 to 15%, even 18%, we can increase the distribution network in this current financial year.
You know, Pratik, 24% PAT margin. Not too many businesses can clock that. How is competition shaping up? Why aren't other players, latching onto an opportunity which you are really sitting on? What stops them?
So yeah, I would like to add here is these margins have been consistent over the years. It's not that it's just 1 year or just 2 years. You see, last 5 years this has been constantly there. Uh, the main reason is we have been able to innovate, bring new stuff into the Indian market, and our category is very new. It's very different. It's a very personalized business where we need the channel partners as well as the supply base. So as on today, we have more than 44 contract manufacturers all across the globe, where we design, we innovate, and we bring new stuff into the Indian market. So it's like a fast fashion. We bring in new stuff all the time, and that's the main reason we cater to the Indian market as per their taste and requirement, and hence the ROC or the PAT margins are so high.
Is there a plan to start selling abroad as well, or are you content with being in India?
So yeah, we have done a JV in Dubai,
Yes.
where we would start in next quarter. We also have a subsidiary in US. We plan to grow our business there. Also, we have formed a subsidiary in Europe. So the things are there in pipeline, but it would take some time, maybe 2 or 3 quarters to start full-fledged there. But yeah, current focus around 96-97% of the business is coming in from India.
On the 1,000 crore revenue that you're aspiring for, I won't call it guidance, I'll call it aspiration, FY29, how much will be export?
Uh, Around 8 to 10%.
8 to 10%, okay. And the margins there are largely in line with the margins here, or is there competition which is different over there?
No, it's on the similar lines. So I would
It's
like
on
to
similar
add here
lines.
is, yeah, if you are able to innovate and bring new things, a person makes his house maybe 2 or 3 times in a year. They want the best and the most new and innovative product for their homes. So they don't mind paying a price and getting a new innovative product for their individual homes. So I think till the time we are able to innovate, we would be able to continue at the same margins.
Very interesting. Pratik, I want to understand how raw material prices are impacting you, because obviously West Asia is likely to have impacted every sector. What's keeping you insulated? And do you pass through all of these price hikes that you get from the contract manufacturers that you employ?
So yeah, most of our products are plastic related, PVC, plastic, polystyrene. Yeah, there has been an impact. There's no denying that. But the good part is our business remained very strong in spite of these global headwinds. We maintain an inventory of maybe 4 to 5 months, so it helps us to avoid any disruptions in the supply line. I also believe that in this challenging situation, there will be consolidation in the market, and smaller players will exit. And I think in the long run, whoever is able to survive this will be on a growth trajectory in future. In terms of pricing, we have done a price hike of around 8 to 9% in the month of April, and it has been well accepted, and business is normal as usual on the growth trajectory.
Does that completely absorb all the raw material price increases, the 8 to 9% price hike? Is that enough?
Yeah, on an average, you can say maybe a couple of percentage has been absorbed. But looking at our profitability and the margins which we work with, I think for us, growth is more important, and we will be able to grow significantly in this year.
Okay, point taken. And with regard to you yourself as the promoter, you've been buying, in a small fashion into your own company. What's caused that? Give us a sense. Where's the confidence coming from?
So yeah, the promoters, we have bought around 3.8% in the last couple of months. We believe that our company is, we are confident that our company is going to grow. And as I said, we have given you our internal target for next 3 years. So we are confident of achieving that.
3.8%. That's my headline, Pratik. 3.8% promoter buying over the last couple of months. That is strong. Do you intend to continue buying more?
We have already reached 74%, so there is not much.
Okay. Minimum public shareholding threshold. Okay. Thank you so much, Pratik. You've been very candid, very pointed, I must say, and very specific with regard to how you see the journey for Euro Pratik.
Thank you so much.
Viewers, that should leave you with enough in terms of how valuations look. He's been very clear with his guidance as well. With that completely timed out on this edition of the show, thanks so much for tuning in.